Hey everyone, welcome back to Corporate Dakota. Today, WMT just filed its annual report for the Walmart Puerto Rico 401k plan, and I'm seeing some very interesting investment details. Quick note, this is not financial advice, just my take on public filings for educational purposes. While this isn't a report on Walmart, the company's direct financials, it gives us a window into how a significant portion of employee retirement assets are managed, and that can tell us a lot about the company's long-term strategy and employee well-being. Let's dive right into the financial heart of this filing, which is the schedule of assets. This tells us what the retirement plan actually invested in as of the 31st of January 2026. When we look at this list, we see a few key categories. First up, we have Walmart Inc. equity securities. This means the plan held common stock of Walmart itself. This is common in employer-sponsored plans, as it allows employees to invest in the company they work for. The current value of these Walmart shares in the plan was over $24 million. Then we see a significant chunk dedicated to notes receivable from participants, which, at over $10 million, represents loans that employees have taken out from their own 401k accounts. This is a pretty standard feature in many retirement plans, allowing participants to borrow against their vested balance for various needs. The interest rates on these loans range from 4.25% to 9.50%, which is actually pretty reasonable, especially compared to what you might find outside of a retirement plan. It is a way for participants to access funds without completely cashing out and facing taxes and penalties, but it does reduce the amount available for their long-term retirement growth. A huge portion of the plan's assets, over $186 million, is invested in various mutual funds. These are basically baskets of stocks or bonds managed by professional firms. We see a big presence from BlackRock Institutional Trust Company NA with multiple LifePath index funds. These are target date funds, meaning they are designed to automatically adjust their investment mix to become more conservative as participants get closer to retirement. For example, the LifePath Index 2030 fund is listed with a value of over $20 million. These funds aim to provide diversification and professional management, which is great for participants who either don't want to actively manage their investments or don't have the expertise to do so. And given the substantial amount allocated here, it suggests these are primary investment options for employees. We also see investments from the Vanguard Group Inc., another major player in the fund management world. Funds like the Total Stock Market Index Fund, the Total Bond Market Index Fund, and the Total International Stock Index Fund are all represented. These are typically low-cost index funds that aim to track the performance of broad market segments. For instance, the Total Stock Market Index Fund alone is valued at over $1.6 million. The inclusion of these Vanguard funds further emphasizes the plan's focus on diversified, passively managed investments, which is a sound strategy for long-term retirement savings. There is also a cash equivalent holding, specifically a Bank of America Merrill Lynch Bank deposit, with a value of just over $1 million. This is essentially a very safe, very liquid investment, likely held for short-term needs or to provide stability within the portfolio. The 3.15% interest rate is probably more about safety than high returns here. Now, let's look at the overall financial health of the plan as detailed in the statements of net assets available for benefits. As of the 31st of January 2026, the total net assets available for benefits were over $222 million. This is a pretty significant increase from the previous year, the 31st of January 2025, when it was around $180 million. That is a jump of over $40 million in a single year, which is a really strong performance for a retirement plan. Looking at the statement of changes in net assets available for benefits, we see where that growth came from. The additions side shows us the money coming into the plan. Total contributions for the year ended the 31st of January 2026 were over $20 million, split between company contributions and participant contributions. But the real driver of growth was investment income, which brought in over $31 million. This was made up of net appreciation in the fair value of investments, meaning the investments themselves grew in value and interest and dividends earned. This indicates a very positive year for the plan's investments. On the deduction side, we see money going out. Benefits paid to participants totaled over $10 million, and administrative expenses were around $186,000. When you subtract these deductions from the additions, you get a net increase in the plan's assets of over $41 million for the year, which perfectly explains that significant jump in net assets we just discussed. Digging a bit deeper into the plan's description, it is a defined contribution plan, meaning that what participants get in retirement depends on how much is contributed and how well the investments perform. It was established back in 1997. The plan allows eligible employees to contribute a good portion of their wages, up to 50%, and importantly, it offers a generous company match. The company matches 100% of deferrals up to 6% of a participant's eligible wages. This is a robust matching program and a significant benefit for employees, incentivizing them to save for retirement. Regarding vesting, participants are immediately vested in their own contributions, whether they are elective deferrals, catch-up contributions, or rollovers. For company matching contributions, they are also immediately vested. This is great news for employees because it means any company match they receive is theirs to keep right away, which is not always the case with retirement plans. Vesting for profit sharing contributions is based on years of service, gradually increasing over 6 years. This section on notes receivable from participants confirms what we saw in the asset schedule. Employees can borrow a minimum of $1,000 up to 50% of their vested account balance, capped at $50,000. There is a small loan origination fee, around $50 to $95 paid by the participant. Loans generally have terms of 1 to 5 years for general purpose loans and 1 to 15 years for residential loans. The interest rate is tied to the prime rate plus 1%. This again highlights the plan's flexibility in providing liquidity to its participants. The plan uses what is called the fair value hierarchy to measure its investments. For most of its investments, including Walmart Inc. equity securities, cash equivalents, and mutual funds, they are categorized as level 1. This means their value is based on unadjusted quoted prices from active markets. For example, Walmart stock and the various mutual funds are valued using their market prices on the last day of the plan year. This is the most straightforward and reliable way to get an accurate valuation. As of the 31st of January 2026, the plan held approximately $24.2 million in Walmart equity securities at fair value, all categorized under level 1. This means these are actively traded securities with easily ascertainable market prices, and there haven't been any transfers into or out of level 3. Which would indicate a reliance on less observable inputs. The vast majority of the plan's assets, over $186 million, are in mutual funds, also classified as level 1. This includes all those BlackRock LifePath funds and Vanguard index funds we talked about earlier. Their value is directly tied to the daily market prices of the underlying securities they hold. This section addresses transactions that might involve parties related to the plan, like the custodian or investment managers. It states that certain investments are managed by Bank of America, NA and Merrill Lynch and Company, who are indeed related entities through Bank of America Corporation. Also, the plan holding notes receivable from participants is mentioned. These are considered party in interest transactions under the law, but they are permitted under the plan's rules and have specific exemptions under ERISA, the Employee Retirement Income Security Act. It is crucial that these relationships are disclosed and managed carefully to protect participant interests. The holding of employer securities like Walmart stock is also addressed here, noting that it meets an exception under ERISA for eligible individual account plans like this 401. This note discusses what would happen if the plan were to be terminated. While no such action is currently intended, the company does reserve the right to terminate the plan. In the event of termination, any unvested amounts in participants' accounts would become fully vested. The assets would then be distributed to participants and beneficiaries. The plan has received a determination letter from the Puerto Rico Department of Treasury, confirming its qualified status under the Puerto Rico Internal Revenue Code. This means the plan operates in a way that benefits from tax advantages, which is essential for a retirement savings vehicle. The company has processes in place to ensure it continues to meet these requirements. This reconciliation compares the financial statements to the Form 5500, which is another regulatory filing for employee benefit plans. It shows how the net assets available for benefits are reported in both documents. The differences are usually minor and related to how certain items like benefits payable are treated. For the 31st of January 2026, the net assets available for benefits per the financial statements were over $222 million, and per the Form 5500, it was slightly lower at about $221 million. This slight difference is primarily due to how benefits that were processed but not yet paid are accounted for differently in each filing. This is the most detailed look at the plan's investments. It essentially reiterates much of what we've seen in the notes, but provides a specific breakdown by asset class and issuer. We see that the majority of the portfolio is in mutual funds, followed by Walmart Inc. equity securities, and then those participant loans. The cost column is marked with double asterisks for many investment types because in a participant-directed plan, the actual cost basis is specific to each individual participant's investment choices, and the plan-level view focuses on the current value. So, what is the story here? This filing for the Walmart Puerto Rico 401 plan paints a picture of a well-managed, robust retirement plan. The significant growth in assets, driven by strong investment performance and company contributions, is a positive sign for the participating employees. The plan offers a good variety of investment options, leaning heavily on diversified, low-cost index funds and target date funds, which is a smart strategy for long-term wealth accumulation. The generous company match and immediate vesting on those matches are excellent benefits that contribute to employee retention and financial wealth. The existence of participant loans shows flexibility, though it is always a balance between liquidity and long-term growth. The risk I am watching is the continued success of the underlying investments, particularly the broad mutual fund exposure. While diversification is key, market downturns can significantly impact retirement savings, especially for those closer to retirement age. However, the plan's structure with target date funds should help mitigate some of that risk by automatically de-risking the portfolio over time. My biggest concern is always that participants may make suboptimal investment choices or rely too heavily on loans. But the plan itself appears to be set up for success. What I am actually looking for in future filings is how these investment returns continue to track against market benchmarks and how the company match continues to evolve. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.